On past editions of Off the Charts, you've noticed we've been talking a lot about gold, we've been talking about inflation, the market being at all-time highs. So this edition, we want to talk about an area of the market that's not gaining as much attention and maybe should be on your radar. Let's go to the charts. So in the chart this week, we want to reference gold X commodities, and we'll get into exactly what that means, versus just straight gold since 1995. And we want to highlight just a couple things. As in a previous video, we did mention that gold tends to perform best when the dollar is weakening, like we saw from 2000 to 2007. Gold commodities perform well. We're kind of in one of those stages right now where the last couple of years the dollar has weakened. Gold has been really resilient and it's generally a good store of value. But when we see this big divergence between gold and the commodity space ex gold, we've seen it in 2009, we saw it in 2016 and 17, we saw it in the COVID era, but now we see the biggest divergence basically, again, where gold has taken off and left a lot of other commodities behind. And I mentioned I'd get into other commodities, so we'll tie into some other commodities. This is crude oil prices going back to 1986. You can see a really choppy chart here, but we're basically back to 2006 levels when it comes to crude oil. We want to stick on the theme of oil. How about olive oil? So olive oil, again, a really choppy chart, kind of took off when inflation spiked in 2022, but it's come back down to earth. Olive oil's back down to 1996 prices. Another area we'll look at is corn, another portion of agriculture commodities. Corn's been very choppy, but we can go back. Corn is either at 2008 prices or, again, 1997 prices, depending on how you want to look at that. The last two we'll look at would be lumber. This one's been in the news. It's a lot cheaper now than it was a couple years ago to build new homes. Lumber's dropped significantly. We're back to almost 2004 level prices if we continue to see more of a pullback. And then the last one, if you're looking to buy a diamond, like my brother Sam, you can get prices basically similar to what they were in 2008. So this isn't to say that these X commodities are a screaming buy, but with Off the Charts, we try to bring you unique ideas that you don't see every day. And we don't see this type of divergence every day. And there's a multitude of reasons for it. But if you are looking for maybe some alternative investments, you might want to look at the commodity space X gold. Thanks for tuning in to this week's edition of Off the Charts. We'll see you next time.